Economic aftermath of the Russia-Ukraine conflict. The Russia-Ukraine conflict began on the morning of February 24, 2021. Causing a significant shock to the global economy, particularly impacting energy and food markets, constricting supply, and driving prices to unprecedented levels. As the largest country entirely in Europe by land area, Ukraine, despite its struggling economy, plays a pivotal role in global trade. Known as the breadbasket of Europe. Due to its highly fertile soil, Ukraine ranks as the fifth largest exporter of wheat and the fourth largest exporter of corn and barley globally. Additionally, it is the top exporter of seed oils, responsible for 46% of the world's sunflower oil supply. Ukraine also boasts a wealth of minerals and a mining industry valued at over $15 billion. It is the world's fifth largest exporter of iron and the fourth largest exporter of titanium, as well as a significant producer of gallium, germanium. The country also generates nearly 70% of the world's neon and 40% of its krypton, both crucial for the semiconductor manufacturing process, fiber optics, and LEDs. The COVID-19 pandemic-related global chip shortage may get worse if there is a disruption in the supply of these essential technology components. Russia, occupying 1/6 of the world's landmass, has a substantial share in global commodity markets. As the world's largest wheat exporter and top producer of barley and buckwheat, the country is also a key exporter of agricultural fertilizers, accounting for 18% of the world's potash and 20% of its ammonia. Russia's extensive mining industry ranks first in global diamond production, second in platinum, third in gold, and fourth in silver, and is a crucial source of rare earth metals like vanadium and cobalt. Most importantly, Russia is the largest global supplier of natural gas and the second largest oil exporter. Germany, for example, relies heavily on Russian gas to meet its energy needs. As Russia faces severe international sanctions for its invasion and retaliates by suspending vital exports, shortages and increased prices in key sectors are expected worldwide. The conflict may even hasten the shift to renewable and nuclear energy, as Western nations are now motivated to reduce their dependence on Russian oil and gas. The following are some of the specific economic impacts of the Russia-Ukraine conflict. Higher energy prices. The conflict has caused a surge in energy prices, which has led to higher inflation and slower economic growth. Disrupted global supply chains. The conflict has disrupted global supply chains, making it more difficult and expensive to get goods to market. Increased uncertainty. The conflict has increased uncertainty in the global economy, making it more difficult for businesses to plan and invest. Damaged trust. The conflict has damaged trust between Russia and the West, making it more difficult to cooperate on other global challenges. Russia's removal from SWIFT. The anti-dollar is the effort of Russia and China to reduce their reliance on the US dollar in international trade and finance. The Western sanctions against Russia in response to its invasion of Ukraine have accelerated these efforts. Thus, Russia and China are increasing their use of the yuan in trade and investment. Inflation. Federal Reserve in the U.S. The central bank will raise interest rates to control inflation and stabilize the economy. The Federal Reserve raised the Fed funds rate to a range of 5% to 5.25% during its May meeting, marking the 10th increase and bringing borrowing costs to their highest level since September 2007. The conflict has also had a significant impact on the global economy, with the International Monetary Fund, IMF, forecasting that global growth will be 3.6% in 2023, down from 4.4% in 2022. The Russia-Ukraine conflict is a reminder that the global economy is interconnected. The conflict in Ukraine has had a ripple effect around the world, and it is likely to continue to have an impact on the global economy for some time to come.